Sellers under pressure as listings jump 7.1%. Today, we're going to cover if we're moving in towards a buyer's market, answer a question from JK, who's our viewer, asking if it's the right time to buy or not. And I'm going to share my COVID story, including one tip I wish I knew, which actually cost me $72,750. So let's dive in and have a look at it from the top. So what's actually going on? Well, housing listings have jumped 7.1% as we see residential listings hit a nationwide 7.1% increase in July, with every capital city notching up an increase, which has largely been fueled by the rapid buildup in older stock, as we see with SMQ research. Let's have a look here with SMQ research. We're looking at the postcode 2000, which is in Sydney. We can see the number of properties that are listed over 180 days on a rolling average. We can also see properties in the 90 to 180 range, and also less than 90 days, between 60 and 90 days, and so on and so forth. We can definitely see that starting to notch up with number of listings increasing, and we look at that as a split between houses and units. We can definitely see that units are the ones that aren't selling by much. Let's have a quick look at Brisbane here. Same thing again. We don't see a massive increase in the data there in terms of listings based on July's data. It has increased, so we can see there's been a notch up on listings. Another, what's that? Another 12 more there, increase there. And once again, with this split, looking like lion's share is really the unit market that isn't moving as much as the housing market. Now, this research is absolutely free. You can go on SM2's website. You can pop in a postcode of your description. I've just looked at the two capital cities in Sydney and Brisbane. We can have a look at Melbourne as well. Same sort of deal here. We can see a slight uptick there in listings up to 233, with a large amount of it being units. So is this something that is really an issue, or is it something that's more of a concern that we need to be aware of? Well, SQM researcher and managing director Lewis Christopher said that most sellers are struggling to sell as demand plummets. It's definitely moving towards a buyer's market, and we'll touch on that in a second. And vendors were largely unsuccessful in their selling efforts over July. He said that there's a clear trend across the cities of rising listings, which is actually being driven by lower buyer interest. And ultimately, we're seeing this as a national housing downturn. Now, let's look at what an actual buyer's market is. Well, a buyer's market is where we find purchasers have an upper hand or can take advantage over their seller from a pricing negotiation point of view. It's also when we see a change in the market happens, that there's more supply or a decrease in demand, or both, where buyers can really take the most out of any negotiations. Definitely something to be aware of. The characteristics. Now, what we usually see is houses tend to sell for less or sit in the market for longer periods of time before receiving an offer. Effectively, what we find is there's more competition between sellers trying to sell their property, which often engages in a price war to entice buyers. So we're seeing that increased listings. We're seeing a little bit more time on market for properties. Depends on the suburb. I think, speaking high level there, based on the SQM research, they're saying that month on month there has been an increase, but interestingly, year on year, a bit of a decrease depending on what you're looking at. So the data there is a little bit contradictory here based on what SQM research is saying, but what they are indicating is that asking prices are currently being adjusted in a downwards trend since February. And no doubt we saw that fear of missing out at the start of the year be such a driver to property values and the growth of the property market, that inevitably that was something that had to stabilize or stop happening. And we're seeing Sydney vendors slashing their asking price by 1.3% in July. Meanwhile, in Melbourne, 0.6%, nationally, 0.7%, with not massive numbers, definitely a decreasing. We did see a rate rise this month, so whether that's going to have further impacts on the slashing of the asking price is probably something we will see. So that's definitely something that we will no doubtably see in data in the coming months. And property selling under distressed conditions have lifted again in July, but remain low compared to pre-COVID-19 levels. Definitely something that we can see here, that prices are falling, which is majority being led by lower buyer demand. Something we talked about, no longer fear of missing out. And Mr. Lewis has forecast that prices will fall by 10% in 2022 and by 5 to 10% in 2023. He'd previously predicted 5% this year and 10 to 15%. Now, I think a couple of things we need to unpack here. The first is what with rates increasing, undoubtedly that is going to reduce people's borrowing ability. In turn, means that they can't afford to buy at the higher price. We're seeing less confidence out there. So as we can see here, fear and greed play a major part in people's approach to property and even in the share market. So whilst we see fear take over greed, we're going to find that prices inevitably will keep going down for sure. Now, another thing to keep in mind is when COVID first hit, there were predictions that the market would fall by 30%. And there's a lot of data out there. There's a lot of different predictions. No doubt, values of properties are going down. We're moving into a buyer's market, so a different phase of the cycle where previously we've been in a rising market, we've peaked, we're starting to decline. So traditionally in a declining market, there's less buyers interested in properties, there's more sellers. Therefore, we see a reduction in values of properties. It is undoubtedly a normal part of the process. I do want to share with my own story now, and also explain to JK, who had a question about, is it the right time to buy? So let's have a look at what happened previously. Well, back in 2020, we saw 2 negative quarters of GDP growth. So technically we were in a recession back then. This was over COVID. My own individual story, I actually lost $72,750 in selling a property because I got caught up in the headlines. And it's easy to do. We're not really going to know what's going to happen. Yes, the markets are moving in a downwards trend, but I think you've got to try and make a decision on what you feel is right for your own household. And to give you an example, I had this property in Brisbane in a city unit, little 2-bedroom unit. I'd previously bought for $280,000 about 10 years ago. And I lived in it. It was first home. Absolutely loved it. When COVID first hit, I got really worried. I thought in May 2020, when I sold it, thought the market was going to crash. I'd seen these headlines where prices were predicted to fall by 30%. And it got me really worried. And everyone was saying that this has never happened before. This is a once in a lifetime thing. We're going to see crazy prices reduce. It's going to take 10 years for the market to correct itself. So I went ahead and sold this property. It took me forever to sell it. It took me about 9 months to sell it. And in May 2020, I sold it for $235,000. I actually made a loss. So I lost it. I bought it for $280,000, sold it for $235,000. I was happy to get rid of it. And I felt that I got out at the right time. Fast forward, I re-looked at the property in September and I didn't even recognize the property. The person that bought it off me flipped it. They sold it 3 months later for $72,750 more than what I'd sold it to them for. And they'd completely transformed the property from what I'd previously had it to what it was that you can see here today. So my learnings were from that was it is important to know what's going on. It's also important to be aware that sometimes the doom and gloom that we see out there can be a real product of the media. It can be a product of predictions that don't actually happen. We saw with COVID, the government stepped in, the banks gave mortgage deferrals, they started printing money. So I think the key here is, yes, values are going to probably keep going down. To answer JK's question in terms of, is it the right time to buy? Well, we know property goes through cycles, it peaks, it troughs. We know that at the moment, GDP, we're currently in a neutral position, so things aren't increasing. The main things to think about is your own position. So the 3 things I want to talk about is your own Character, so think about your track record with liabilities and how that looks. Your capacity, so if you're going to have issues with being able to meet your commitments in the short and longer term, and the amount of capital you've got. So let's break down each and look at what they look like. The first is character. So if you've had loans in the past, what's your track record? Have you had issues? Have you had defaults? That's going to play a big part in your ability to secure finances and what that looks like. Capacity, now this is based on your ability to repay a loan, and you've got to have a think about the short and longer term. Are you going to have issues? Are you in a short-term role where it's unlikely if you lose a job, you're going to be able to, secure employment for the same income? Or are you in a really safe job? This is one question you've got to really ask yourself, because timing the market is very difficult. But if you're secure in your employment, you need a house over your head, and you're going to be able to achieve the mortgage repayments over the longer term, well, then having stable income will definitely give you confidence. And the last one is capital. So that refers to your deposit. Do you have a deposit together? You don't need 20%. You can work with as little as 5% with some of the schemes. So I think with JK's question there about, is it the right time to get in the market? No one will ever know. In my example there, I look back and I wish I didn't sell. I actually lost money and I left a lot of money on the table. I saw their headlines and I got scared. And same thing here, JK. There's a lot of people out there that are going to say, this is the stupidest time to buy, or this is the best time to buy. I think you've got to cut all the noise out, work out your comfortable ability to meet repayments. Jump on our website. We've got a repayment calculator where you can actually look at what happens if rates go to 4%, 5%, 6%. Where's your comfort level? Where are you going to find that you can't meet repayments anymore? Well, stick with that. The banks will tell you they'll lend you $1 million, but that doesn't mean you take $1 million. It might be that your comfort level is only at 300,000. So that's something we can help with. Certainly, I think at the moment, there's a lot of news out there. There's a lot of information. It's really hard to cut through it and work out what's the best move to make. The truth is, you'll only know in hindsight. We also talk about when timing the market, it's more important to understand the length of time you're in the market than trying to specifically get the exact moment in time to enter, because you'll only know when you look back in hindsight. Like my story there, I left a bunch of money on the table and I thought at that stage I was making the right move. Here at Hunter Galloway, we're mortgage brokers. We're based in Australia. We deal with people Australia-wide. If you're not sure on what to do, let's have a chat. Feel free to hit us up. Call us on 1300-088-065. We can assess your situation. We can give you an idea on your borrowing capability, as well as try and do some forecasting and give you an idea on repayments and what that looks like and where your comfort is, because it's all well and good to go with what the bank says you can get, but it might be that you're only comfortable with something a lot lower. Visit our website, huntergalloway.com.au. And guys, as always, thanks for watching. Leave a comment below like JK did recently, asking if it's the right time to buy. Love to see your questions and happy to answer them. Thanks again, guys. We'll see you again soon.